When Lambo, I'm such a degen.
Welcome to Degenny from the blockchain, where we defy logic, and this is the continuation of a series of videos going through President Biden's economic report that he released back in March that has a lot to say about crypto. So let's continue on where we left off. Okay, both the number of crypto assets and their combined market value have risen over time, reflecting their increasing popularity around the world. There are several possible benefits that proponents claim for this popularity of crypto assets. These claims are reviewed in the next subsections. Claim: crypto assets could be investment vehicles. People invest in assets with the hope of making returns on their investment by accepting a certain level of risk of loss. For example, traditional investments such as equities and bonds offer a certain level of expected returns for their risk exposure. Similar to these traditional types of assets, it has been argued that crypto assets are also investment vehicles that offer an expected return for a given risk exposure. Simply, technically not true. Crypto is a digital asset that you own. It is ownership of a digital asset. Bonds, equities, stocks, securities, those are not digital assets that you own. It's as simple as that. And furthermore, digital assets, crypto is that you can participate in an ecosystem. I've made this analogy before, similar to when you take your US dollar, you go to an exchange at an airport, and you get back the euro. You just made an exchange, and now you have another form of currency to use within that ecosystem of Europe. No different than crypto. This is a currency, it is not a security, and it has utilization within certain ecosystems, just like national fiat money that you use in those countries, those respective countries. Simple as that. Hence, depending on the risk appetite of investors, one might invest in crypto assets with the hope of quickly making a large profit. Moreover, some have argued that crypto assets can serve as a hedge against inflation, hoping their value will keep pace with or rise more than the rate of inflation. Why is that a bad thing? Why is there so much inflation? Look in the mirror, US government. Don't try to blame crypto on anything. All right, claim: cryptocurrencies could offer money-like functions without relying on a single authority. These aren't claims, these are facts. One stated goal of cryptocurrencies has been to create a financial system that is censorship resistant and unable to be controlled by a government. Instead, distributing control among pseudonymous global actors that do not rely upon any trust. Pseudonymous global actors. Can you just call us people? Humans? God. And trust in existing financial institutions. Yeah, I'm sorry. With banks going down, let's see. There have been 4 or 5 banks that have gone down over the past 6 months or so, 5 months or so, that were in like the top 30 in the country or whatever in the United States. So in the top 30, in the past 6 months, take the top 30 crypto, and none of them have gone to zero. Unless FTT was in the top 30. But even then, I mean, it's still around. But anyway, Terra Luna was, in June or May or June or something in UST. So I'm just talking in the last 5 months or so, when 4 or 5 banks in the United States that were in the top 30 or 35 went down. 0 crypto assets have gone to zero that were in the top 30 or 35. And even if you go back in the past year, only 2 or 3 with UST have gone down. And those, I mean, FTT is trying to make a comeback somehow. But anyway, even that is almost only like half of what's gone down in the banking system. So, I don't know. Crypto over the past 5 months, 0 coins in the top 30 or 35 that have gone to zero. In the top 30 or 35 banks in the country, 5 or so have gone to zero. Just saying. Okay, where are we? Censorship. Okay, in particular, some cryptocurrencies aim to replace central authorities that issue money by instead relying on a distributed network with benefits spread across the network that issues representation of value that can be minted or transacted without central authorities. For example, when implementing monetary policy, governments can profit from issuing money because the value of money is generally higher than the cost of issuing it. This is called seigniorage. In contrast, many cryptocurrencies aim to distribute the profit from issuing a cryptocurrency by rewarding participants that can verify a transaction through a consensus mechanism. In this process, participants can be rewarded with the new issuance of crypto, as well as financial transaction fees, earning them a profit for supporting the distributed network that maintains the crypto. This could be seen as a novel way to distribute profits from issuing new assets. All right. Claim, crypto assets could enable fast digital payments. Claim, again, fact. In recent years, the usage of cash has declined dramatically as the usage of digital payments has increased substantially. Figure 8.3 demonstrates the trends in cash and check transactions against those in debit and credit card. Oh my God, debit, credit payments. All right, which are forms of digital transaction. In the last decade, payments in cash and checks have declined dramatically, while digital payments have notably increased. Okay. As demand for digital payments increases, it has been argued that stablecoins could be used as near-instant 24/7 payment instruments. What do you mean it has been argued? Again, that's exactly what it is. It's near-instant and it's 24/7. As of December 22nd, 2022, there were about 200 stablecoins, oh God, with an estimated market size of roughly 140 billion. So that's pretty substantial. I mean, that is right around the amount of money the FDIC has, right? So why are you scoffing at this? I don't understand. And 200 stablecoins. I don't know what those 200 stablecoins are, but I'm sure 10 to 20 are the ones that are prominently used. So, to talk about like Tether or DAI or USDC, like having all of the volume and then saying 200 stablecoins are in there. Like, my point is that USDT is well proven, and USDC, although it got depegged, that was from a bank that went down where they had their assets. Where else do you want USDC to put their assets? USDC, I would think, is trying to be as safe as possible in the system that we currently have right now, and they're putting their reserves in a bank. Wow, imagine that. And that bank happens to go down, and now you're blaming USDC for poor management or poor ethics because you're in crypto. No, that is not right. That is not right. The two crypto assets, Tether and USD Coin alone, accounted for roughly 80% of the total market of stablecoins. I should have kept reading. Since stablecoins try to be pegged to a reference asset such as the US dollar, another currency, or a basket of currencies, proponents argue that stablecoins could eliminate exchange risk when used as a settlement method. That is, if one stablecoin is always worth $1, then an individual using a stablecoin to buy or sell goods has the expectation that its nominal purchasing power will not change dramatically after their transaction. Stablecoins have been suggested as a possible way to simplify cross-border transactions and remittances. Sounds good to me. Claim, crypto assets could increase financial inclusion. Again, that is not a claim. It is currently happening. Some segments of the U.S. population are unbanked. True. Meaning they do not own a bank account. True. Others are underbanked. That is, they own bank accounts but often use expensive non-bank financial services. Well, there's definitely change coming. Black households have disproportionately higher rates of being unbanked and underbanked crypto assets often are promoted as a tool for reaching these populations to improve their access to financial services and build wealth to achieve upward mobility. How can you have something so positive like that be in this report officially, yet our government does not want to accept it as inclusion in technology and finances for some people? They're literally fighting against it, except for some Congress people that are trying to fight the bigger agencies in the United States to get the stuff like this implemented into our U.S. financial system. I don't see any down. I mean, it's just the way you lay it out and summarize it, President Biden. I don't know anybody reading this would not want that. For example, many crypto assets do not impose minimum account requirements. Yeah, of course. Yeah, because it's inclusive. Or charge overdraft fees. Hello. Yeah, duh. This is insane, man. Charge overdraft fees. Right. You're going to charge me for money I don't have. You know? In contrast to some traditional banking institutions, unbanked individuals cite such attributes as primary reasons they do not have bank accounts. A recent report found that minority households are more likely to have invested in crypto assets than other households. Good for them. Good for them. You're ahead of the game. You're into the future. Excuse me. All right, another claim. Crypto assets could improve the United States' current financial technology infrastructure. That is a fact. The distributed ledger technology that underlies many crypto assets is based on a number of technological advances. It addresses the problem in certain circumstances of establishing trust and a consensus on the true history of transactions among a group of mutual suspicious parties. Hold on, let me see. It addresses the problem in certain circumstances of establishing trust and a consensus on the true history of transactions among a group of mutually suspicious parties? What? What does that mean? It is effectively a shared database whose contents can generally be trusted. Oh, okay. Even though it is operated by entities that generally do not have a reason to trust one another. Wow. Yeah, you don't need to trust anybody in crypto, honestly. Because I mean, yes, of course you do. Hold on. I didn't mean to say that. I have to give context to that. So if I'm sending money to a wallet, yeah, it's on me. But in terms, and if that wallet turns out to be a scammer, that's on me, of course. But the actual asset or currency that I'm sending to that wallet is real. It's right there. It is not, doesn't have to be intercepted by a third party and verified. The money transfer, from the currency transfer from one wallet to another, doesn't have to be trustworthy. It doesn't exist. It is trustworthy. It is not something that needs to have a third party implemented to see that this money's coming in. Yep, it's all there, counted. Yep, okay, it goes to that wallet now. No, it's all there. There's no money being lent out that we have to get back and unlocked and then sent to another thing. No, that we don't need 3 to 5 business days, for example. It's instantaneous. And if you are participating in lending or yielding in your crypto wallet with crypto assets, that's great. You can't do any transaction until it's pulled back into your wallet and sent from your wallet to the next. Simple as that. No trusted third parties needed. For crypto assets, the database stores the set of transactions that have occurred among network participants. In addition, more recent developments in DLT have enabled new features and improved efficiency, such as smart contracts, which automatically trigger particular actions without the need for ongoing oversight. Yeah. Okay, now they want to get into the reality of crypto assets. Ooh. I'm going to keep going. We're going to keep going. No new video for this. Even though we've hit our limit here. we're past 15 minutes. We're going because we just had a bunch of claims. Maybe we can go through them one more time and then go to the reality, or what the President Biden is saying is a reality. So here we go. Claim: crypto assets could be investment vehicles. Could be investment vehicles. Ah, man. I don't know. Yes, does the value go up? Yeah. I mean, you would hope. But is that investment? I don't know. I feel like it's ownership of a digital asset. In the same way you could buy an NFT, that's ownership of that NFT. If it happens to go up, that's because people in the market, or just humans out there, are deciding they want that. Just like toilet paper in COVID, during COVID crash. That is something that went up in value and was scarce. That's not an investment, because you're using it in the bathroom, just like you would use these crypto in the ecosystem. So you're owning that asset, just like you own a currency. When you have that dollar in your hand, you own that dollar until you give it up. Actually, I'm not even sure if that's true, because it probably can be confiscated. It could be. If the IRS came by or something and says, give me your money. So anyway, claim: crypto assets could be investment vehicles. Claim: cryptocurrencies could offer money-like functions without relying on a single authority. That's a fact. Claim: crypto assets could enable fast digital payments. That's a fact. Claim: crypto assets could increase financial inclusion. That's a fact. Claim: crypto assets could improve the United States' current financial technology infrastructure. That is a fact. Now, the reality of crypto assets. This section investigates the claim benefits reviewed earlier in the chapter and presents the risks and costs of crypto assets. So, crypto assets are mostly speculative investment vehicles. As shown in Figure 8.4, compared with many other asset types, crypto assets are very volatile and hence highly risky. Yep, we know that. Thank you. That's exactly why I'm in crypto, because I want the volatility at this point. Because they are very volatile, crypto assets can be used for speculation, an investment strategy that seeks to make a profit from short-run trading. Well, that's no different than some stocks that are out there as well. So, but you allow that to happen. One reason many crypto assets are highly volatile is that many of them do not have a fundamental value. Nice. For example, stocks are claims on the future profits of firms, and debt is a claim on an interest and principal payments. Well, we're not talking about future profits on firms, stocks, or debt. We're talking about ownership of a digital asset. That's what we're talking about. So even commodities such as gold and silver have fundamental values because they can be used in jewelry and for special manufacturing purposes. Well, I can argue that crypto also has fundamental values that can be used in ecosystems for specific manufacturing purposes, NFTs, minting, governance. Okay? So, crypto called a commodity then. I mean, it's not a security. Conversely, unbacked crypto assets are traded without fundamental anchors. Oh, wow. US dollar. Suggesting that their market price only reflect speculative demand or market sentiment, not claims on cash flow. Relatedly, the Department of Labor of the United States issued, I'm sorry, we just can't go through the boxes because there's so much to get through. Issued guidance to protect investors' retirement plans with respect to this asset type. Recall that one of the purported benefits of crypto assets like Bitcoin was to hedge against inflation, meaning that their value does not erode as inflation increases, but as inflation increased globally in the second half of 2021 and 2022, the price of crypto assets collapsed, proving them to be at best an ineffective inflation hedge. Oh my Lord, oh my God. They have no idea of the Bitcoin halving, do they? They have no idea of the Bitcoin halving. Anybody in crypto that did research on the 4-year cycle could have told you that by the end of 2021, we would have seen the peak of crypto. And in 2022, the prices of crypto collapsed. And that's exactly what it has happened in 2014 after a 2013 bull run. That's what happened in 2018 after a 2017 bull run. And that's what happened in 2022 following a 2021 bull run, proving them to be at best an ineffective inflation hedge. So is crypto dead? Is crypto done? Is that it? Did it just collapse after 2021 and now it's dead and there's no more crypto? Interesting. One could argue that crypto is actually getting stronger right now, but there's a blank space right there after that period because they want the narrative to end right there. Cryptocurrencies generally do not perform all the functions of money as effectively as sovereign money, such as the US dollar, sovereign money. As disclosed in Box 8.1, money serves 3 functions as a unit of account, which means that it acts as a benchmark upon which the values of different goods and services can be compared, as a medium of exchange, which means that it can be used to trade goods and services, and as a store of value, which means that the amount of goods and services that a unit of the money can buy does not fluctuate dramatically over short intervals of time. Sure, yeah, I got you. But how can crypto be part of this highlighted process right here if you're not accepting it? So you're saying that crypto doesn't do these things. That's because you're not allowing it to. But it could. It absolutely could. It can be a medium of exchange. And you can trade goods and services with it. You can buy things with it. But you're providing... So if this is your stance, just ban crypto as a form of utility in the United States. Meaning you can never use it in stores. You can never use it to trade for things. Because you obviously can't touch the other side of it, the decentralized side of it. So we can keep trading crypto and buying it as long as we're in the Web3 ecosystem. But in terms of, yeah, goods and services, sure. I mean, if I know somebody has a Bitcoin address, I can send them Bitcoin and they can provide a good or service. I mean, nobody's stopping that. But in terms of officially on the books and, you know, using it as an exchange and means to buy things and stuff like that, that's on you, United States government. You're not allowing that to happen. Although it could, and it could be faster, it could be more cost effective, and it could be instant in terms of there doesn't need to be 3 to 5 business days, you know, to verify. Just saying. So what you lay out here is correct, but there's also a second story that you're not allowing it in because it can do it in better than what you have right now. Although cryptocurrencies currently serve each of these functions, I should always just keep reading the next sentence, but they only do so in limited ways in the United States. Yeah, so they do not serve from an economic perspective as an effective alternative to the US dollar. Rewind the video a minute or two. Exactly what I just said there applies to this because you won't implement it within the financial ecosystem of the United States. It would enhance it, but you don't want that. For the first monetary function question, cryptocurrencies could serve as a unit of account, given that the relative values of goods and services can be expressed in cryptocurrency. A single chicken in commerce is worth roughly 10,000 satoshis. However, individuals would likely need to first convert bitcoins or other cryptocurrencies to dollars to understand relative values of cryptocurrencies that are not effective in the US dollar as a medium of exchange. Discussed below, these cryptocurrencies currently do not fully serve as units of account. I do not argue with that. They certainly do not right now. Again, you won't allow them to. Within your structure. They do apply to that in that way to us in the crypto ecosystem, but not to you in yours. The second question is whether cryptocurrencies can serve as a medium of exchange. The answer is that in the United States, they are not as effective a medium of exchange as the US dollar. This is because they can be used to purchase other crypto and to buy goods and services at a smaller number of firms relative to the US dollar. The strength of the US dollar is derived from several important factors such as faith in government institutions and the legal system, but cryptocurrencies lack these factors. Oh my God, yes, they do lack those factors because there is no faith in government. So crypto does not have faith in government. That's why it exists. Oh my God. So it's saying here, the US dollar is derived from several important factors, such as faith in government institutions. Who watching this video has faith in government institutions in terms of the US dollar and what it's backed by? And the legal system. Are they saying, okay, I am getting serious here. Are they saying, you know what? Let's do this one. Present negative on crypto. Are they saying that the US dollar is backed by the legal system and faith in the US government? Is that it? If that's the case, we are screwed. We are screwed, man. Oh my God. Wow. Well, wow. There's so much good stuff in here. It's amazing. All right, third, cryptocurrencies currently experience substantial amounts of volatility and thus are not stable stores of value. Nobody said they were. For example, the value of a Bitcoin relative to the US dollar increased by over 1,000% from March 2019 to March 2021, and then decreased by over 70% from November 2021 to October 2022. This volatility means that anyone who is using Bitcoins to store their savings is subject to high volatility risk in their purchasing power. Ooh, 401k? Just saying. Go talk to people who tried to retire in 2008. This is so pathetic. This is so pathetic, US government, President Biden. Oh my God. So you're taking the value of Bitcoin from March 2019 to October 2022 in this example. And if you pull out to 2009, you tell me what downtrend you see in Bitcoin. That's all. That's all. From even 2017, pull the chart out to 2017 and tell me what downtrend do you see in Bitcoin? Because you're just taking a time frame where Bitcoin decreased by 70% from the end of the bull run in 2021 to October 2022. You're taking less than a year sample size for that statement where Bitcoin dropped 70%. And again, as mentioned earlier, we all could have told you that was going to happen. So, I mean, you're pulling facts. I mean, those are facts. Nothing is incorrect about that statement. But when you present it in a way without the context of the entire 14 years of Bitcoin, or the fact that, you know, if this was published in March 2023, Bitcoin definitely had risen back up by then. And I think right around this time is when the banks, some of the first banks went down and we saw the first really big rise in Bitcoin. But for the sake of this video, Bitcoin has doubled in its value just this year, from bottom to top. Oh boy. So they're only telling you part of the story. This is classic. This is classic. So as figure 8.4 shows, the volatility of cryptocurrencies outpaces those of many other financial asset types. Cryptocurrencies regularly exhibit a similar amount of volatility as U.S. equities experienced at the onset of the COVID-19 pandemic. There is also tension in there's also tension in an asset being promoted as both money and an investment vehicle. Hey. You're calling it an investment vehicle. I never call it an investment vehicle. I call it ownership of a digital asset. That, you know what, with the announcement of Stellar 8 Assist by the senior product manager Tori Samples at Stellar Foundation, you can now send aid in Stellar or USDC or a bunch of other crypto directly to people in need, and there does not have to be a third party involved. It can get there instantly, and that recipient can go straight to MoneyGram. I just saw one in Walmart. You can do it right in Walmart. You take your digital, let's call it USDC, you go straight to Walmart and you cash it out through MoneyGram. So that's an example of crypto being money and not an investment vehicle. Things can be multiple things at the same time. But when you see such fundamental value there in the technology, it doesn't become an investment vehicle at that point. It becomes a utility. It becomes the next wave of technology and an increase in efficiency in the United States. It's not a stock. As money, the instrument should have a stable value, suggesting limited price volatility. Wow. Oh man. I could pull up a chart. Oh man, let's do it. The highlighted sentence says, as money, the instrument should have a stable value, suggesting limited price volatility. I present to you the purchasing power of the US dollar. Right here. Look at that chart. Is that something that is stable? Is that something that is not volatile? Not only is it both those things, but it is something that in about 100 years has dropped maybe 95 or more % in value. And that is what the US government is trying to tell you, that crypto is too volatile and cannot be trusted as an instrument of stable value, suggesting limited price volatility as money. Yeah, US dollar. Way to go. Way to go. This report is unbelievable. Absolutely unbelievable. Oh, but as a risky asset, it should experience price volatility for which an investor would be compensated with a high expected return. Holding everything else constant, the riskier an asset is, the less likely it can effectively serve as money. Cash, US dollar, I just showed it. Something that seems much more risky over the course of about 100 years than Bitcoin, which has only gone up. Just want to say that. In sum, in addition to generally being speculative assets, cryptocurrencies currently are not effective alternatives to sovereign money such as the US dollar. As mentioned above, most crypto do not have fundamental value, but that is not a requirement for them to function as money. In fact, sovereign money does not have a fundamental or intrinsic value. Yeah, no kidding. Exactly. The US dollar does not have fundamental or intrinsic value. Most cryptos do not have fundamental value. They do. I've given many examples. Currencies are not effective alternatives to sovereign money such as the US dollar. Sovereign money does not have a fundamental intrinsic value. Well, crypto has sovereignty behind it, and it has fundamental value. So your form of money that you have is not sovereign nor have fundamental or intrinsic value. Even so, sovereign money can easily satisfy money's requirements as discussed in box 8.2. The main reason for this is that the value of sovereign money is backed by a trusted institution, the central bank. Trusted. the trusted institution, a central bank, which its branches have been going down. That's trusted. One important feature of many cryptos is validating transactions through consensus mechanisms, which are a way to distribute profits from new issuance among participants such as cryptocurrency miners that verify the currency transactions. Hence, the supply of crypto generally increases with the number of verified cryptocurrency transactions. In the case of a new issuance of sovereign money, monetary policy reasons play a major role, and the resulting profits from the new issuance of sovereign money accrue to governments. Yeah, look at that. Crypto asset mining, a risk to the environment. Oh my God. Oh my God. Oh my God. The military's not. Washers and dryers are not. Probably washing machines, gasoline, oil drilling. Yeah, these are not a risk to the environment. Just crypto. I'm not even going to read that. Just trying to continue on here, get through this. Congress of the United States, the profits from the issuance of sovereign currency benefit taxpayers by lowering tax needs as central banks effectively return these profits as government revenue. Oh, man. It's all just this is just a distraction. That's just a distraction. It's confusing you. That's all it is. It's confusing you. That's just saying you need us, you need the dollar because we're lowering your tax needs and you're getting revenue or you're getting profits back from the government's revenue. Blah, 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 blah. It's just a distraction. It's just a confusion. Make no mistake about it. I think we'll get back into stable coins in the next video. We got to kind of wrap it up here and finish off this video. So yeah, Biden's economic report, not painting a good light on crypto, but as in my opinions that I've just kind of gone through as we read through this, I see that not the entire picture is being presented by the president here. And a lot of the things that are being said in here that are negative on crypto actually apply to the US dollar. I mean, it's really sad, actually. It's hilarious because I see it. Many of you watching this see it. But in this official economic report by the President of the United States, they do not see it. Or they are trying to make you not see it. It is so visible. Do your own research. This is not financial advice, just my blockchain reaction. Thank you for watching. Hey, thank you for watching to the very end. And before you go, please subscribe to the channel, crank up that like button, drop a comment and share the video. If you want to join me on the VEUIT platform, the Web3 streaming platform, I'm going to migrate all my content over there and create new content on the blockchain. My referral link is in the description below.